Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today I'm joined by Tobias Yao from Wilson Asset Management and Arden Jennings from Ausbil, and we're talking about turnarounds. They can turn around or they can fall down. Start with you, Tobias. Baby Bunting. Looks like it's already turned around. It's had a great time. Childcare goods, retailing, buy, hold or sell.
Look, Baby Bunting is a buy for us. They have the dominant position in the market. We think over time they can continue to grow their market share through store rollouts as well as taking their margins to 10%. It's a buy for us.
Arden, everything goes broke in this sector, it seems like. Baby Bunting, last man standing, buy, hold or sell.
Yeah, look, I agree with Tobias here. It's a buy for us. Look, they've had everything but the kitchen sink thrown at them in the way of competition going bust. But now they are clearly the market leader that's able to dominate that category through margin improvement. So we expect that to happen in the second half of FY19, and that's beat consensus, which should lead to a further re-rate.
Okay, let's get into the sexy area of software. 3P learning, mathematical education software, gone to the US, buy, hold or sell.
Yeah, it's a buy for us. It's been a tough time recently, especially since IPO for 3P, but credit to management. They've successfully put through a cost out program, but while also reinvesting back into the business. We think at the current share price, the market isn't factoring in any growth within the US. It's got a good balance sheet as well. It's got $23 million of cash on the balance sheet, no debt. So if they are able to get the US right, and we think the ingredients are there, it could re-rate materially. It's a buy.
A lot of promise, been tough on the share price, buy, hold or sell.
Look, it's a hold for us. Look, we think it's very hard for Aussie companies to break into the US. For 3PL, they come up against Dreambox, which is one of the competitors, cashed up, very aggressive in the market. But the stock price is not expensive, so it's a hold for us.
Okay, it used to be called Cab Charge. Now get the award for the best change in name, A2B. Buy, hold or sell, Tobias.
Look, we think A2B is a buy for us. The regulatory headwind is behind them, so the business is poised for growth. Look, they're investing in the right things, technology, driver and consumer experience. And I think if they can deliver on their strategy, even with all the disruptors, the ride sharing, Uber, and then they'll look very attractive to a potential trade buyer.
Uber's come. Have they fended Uber off? Yeah. A2B, buy, hold or sell.
Yeah, it's a hold for us. Look, they have been disrupted by technology. Management have done a good job, credit to them, for reinvesting in the business, particularly their fleet and additional technologies. But for us, with the valuation where it is, and further competition coming into the space, you've got Ola, Taxify, and others that are continuing to bite at their heels. We think it's a hold for now.
Okay, here's your chance. Something that's turning around that we all should be looking at. Give us one.
Yeah, sure. So the stock I'm going to mention probably isn't an operational turnaround because I think that's well underway, but it certainly needs a share price turnaround after copping a battering in the last 2 months, which, look, I suspect some of that is quant selling in the sell-off, but Emeco, EHL, some would say it's probably well owned by the small cap community, but I think it's deservedly so. It's one of the best ways to get exposure to the mining service space, playing the utilisation, but not taking the project-specific risk. We've seen what's happened to RCR. Management are fantastic, they've executed well, and we think that there's margin upside in FY19 through operational efficiencies and also increasing utilisation. It's a buy.
Okay. Tobias, can you match that or better it?
Well, look, it has to be Myer for us. A lot of press recently on this one. Look, we're just back in the management team led by John King to firstly right-size the cost base of the business and then focus the investment on improving customer experience and product mix. He's done it before in the UK. We think he can replicate it in Australia. We think there's still a lot of value in the brand.
As Forrest Gump said, turnarounds are like a box of chocolates. You just don't know what you're going to get.